Welcome to Markets Now. I'm Michelle Rook along with Randy Martinson with Martinson Ag. We closed out the day on Friday, kind of mixed in the hogs and grains, a little higher day in the cattle complex. But Randy, let's start off with soybeans. We did end lower for the day on Friday, and of course some more Argentina rains, part of the story, but did we also see a little consolidation or profit taking?
Yeah, I think we did. I mean, we bumped back up again in some pretty good levels. I mean, we weren't quite back up flirting with the highs that we saw recently, but we still had some pretty good push this week. We're going to see, like you said, a weekly higher close, which is pretty decent, considering everything that's going on. I think our demand continues to be strong, and that's what's kind of helping underline and support this market, along with the expectation of tight supplies.
Yeah, we had pretty good weekly exports and some export tenders or some flash sales this week, which kind of gave us a little momentum, didn't it?
It did, and this was a week we did not expect to see a lot of sales because of China being on holiday. We didn't
Right.
expect to see a lot of exports, and we did see a mixture of both corn and soybeans, primarily soybeans, which was a good sign, and it shows that maybe we got prices dry, low enough to encourage consumers to come in or importers to come in and buy.
So soybeans up about 3 cents on the week. The other big gain was in soybean meal, almost $10 higher for the week. But did we negate the bearish weekly close that we had last week yet?
Not probably not likely. I mean, I think we're still going to be watching the weather in South America to verify that, especially Argentina. It does look like that, they are going to have a production issue and they will not be able to meet all their needs. So the U.S. will get some of the exports for meal that Argentina isn't going to be able to facilitate, but it's not going to be maybe as much as what we were hoping for.
Yeah. So corn market was almost sideways on Friday, but up about 7 cents for the week. And that corn market actually felt technically like we were in pretty strong footing this week.
It did, and you were starting to see open interest increase, exports are increasing a little
Right.
bit. All that it did have a little bit better feel to the corn market this week, and it shows that we could be looking at maybe making a turn. The big question is going to be, will China come in and start buying U.S. corn? That's going to depend on how things go in South America, in Brazil for the safrinha crop. But right now there is some concerns about some delayed plantings because of the wet conditions and the slower harvest for the soybeans.
If we finally saw China come in to buy, or at least export pace pick back up, do you think that would be enough to get corn back over 7, or what's it going to take?
It's going to take that to get over 7, and I think we're still going to have a little bit of an issue. We need to see our ethanol industry start to expand a little bit as well. Our crush continues to be a little bit below the pace needed to make projections. So I think a combination of a little improvement there and China buying would certainly do it.
Yeah. And corn obviously got a little help from both the soybean and especially this wheat market being higher for the week this week. And let's talk about wheat. Was that all short covering and technical in nature, or was that market trying to put some risk premium back in, or what?
I think they're trying to put some risk premium back in again. They're talking about the cold temperatures going down, but I think there's enough of a snow cover in the southern plains that this cold snap really shouldn't do much damage. But we're getting closer to the wheat coming out of dormancy. We did see Texas's report this week that showed a decrease in conditions, and it looks like that's going to be the trend that we see in the rest of the states down south as well. We've seen a little improvement in the drought, but has it been enough to really help support that or bring that winter wheat crop back into good conditions? I don't think so, and I think the market needs to bring some risk premium back in.
Yeah, for the week, Kansas City led the gains. HRW up 21 cents, so that probably is speaking to your point about putting risk premium in. Both Chicago and Minneapolis were up about 8 cents for the week. Okay, cattle market. We had a higher weekly close there as well, despite the fact that we had kind of some sloppy cash trade. But that market is still building the premiums into the back end of the board on tight supplies. So almost two-tiered, aren't we?
We are two-tiered. I mean, it's like we're seeing enough supply short-term to meet the demand, but we know that it's going to be tight going forward. But that's been kind of our story that we've been looking at. And yeah, and you get to the August and further out contracts, we're at contract highs again,
Yeah.
which have been consistent this week. But I do think that, yeah, the cattle inventory report next week might tell us will tell us the story, which I think will help support the front months as well.
So I've seen some early estimates on that, maybe with this inventory down as much as 4%. If we get that, how much more could this market take off?
If we see a 4% decrease, I think we got a pretty good jump in mind, and that could take the feeder cattle up to the contract highs that we saw 2014. At that point, then we're going to have to start seeing a few more things to be able to hold those gains. But we do have the potential to get the market back up to those old highs that we saw a few years back.
Yeah, and kind of sloppy cash trade this week again. Most of it had to do with poor feedlot performance, but we had a lot of formula cattle we used this week too, right?
We did. I mean, it was, and it was tough getting. I mean, with the storms and everything, it was tough for cattle logistically to move cattle. But yeah, the Packers, I think, just sat back and waited for the cattle to come. And there was some forced sales in, Nebraska, Kansas, because of how bad the lot, how bad the lot are as far as mud and snow.
April live cattle for the week up 90, and we had March feeders up 250. Hogs, well, we ended lower in the front month, but the back months were up. And in fact, we kind of scored a reversal back there. Do you think we can build on that?
Boy, we're getting an awful wide spread between the front months and those deferred contracts, and it's looking almost like that's getting to be too much. So either we're going to have to start seeing the front months catch up, but again, our demand continues to be a little bit weak. Our cash continues to be weak. I think we can see a little bit better performance, but if the cattle go, I think it's got to bring the hogs with them.
Yeah, no doubt. Thanks so much for joining us, Randy Martinson with Martinson Ag, and that's Markets Now.